Good morning.
Good
This
morning.
is
Good
the
morning.
Morning Muffin Show. Oh, hold on. Why? Sometimes I hit this button and it doesn't, instead of like going on, it like goes to change it. Okay. Good morning. Welcome to the Morning Muffin Show, your morning carbo load of real estate.
Good morning.
Good morning. I'm Lisa Wickman,
Jennifer Cotis.
And Rick
and
Wenner.
we have a special guest with us this morning, Rick Wenner from Your Credit Life. And we talked about where this is part two of credit repair and so forth. And Rick is with Your Credit Life, and that is a financial wellness company. And Rick is a credit coach. So we thought it would be great to have him on to discuss and continue the conversation that we were having last week. So Rick, can you just start by telling us a little bit about you and your company?
Yeah, absolutely. So so most of us know us as Your Credit Life on the web, on the internet. But yeah, we're a financial wellness company, and our mission statement is to help people with their struggles when it comes to credit and debt management. So it's a lot of education. It's a lot of how do I get to my goals by better managing credit and debt.
Love it. And I know, well, we were just talking before the show, so we've got a lot of things to cover. But one of the questions was who uses your company? Who's your ideal client? And then we'll dive into a couple of other things as well.
Yeah, no, that's a great question, and I think one of the things as a credit, in a financial wellness company, what we struggle with sometimes is we don't have a cookie cutter solution, so it has to become very customized and very unique to getting someone to their goal. So our unique, proposition to anyone is someone who is looking to get their credit and their financial situation in a position to pre-qualify for a home loan. I mean, I'd say 75 to 80% of our clients, that's their goal. That's their mission in partnering with Credit Life.
Okay. So who is that client? Because it's not just necessarily a first-time home buyer, right?
No. Often it's somebody who, oftentimes, to me, and I've reviewed a lot of people's credit profiles, and it's not just their score, it's their whole entire credit profile and their credit report. Their credit profile reads like a book to me. And so probably the easier way to explain it is let me tell you what that story or that narrative reads. It's typically someone who may have taken a risk in financing a car, or taken a risk in finance student loans, or taken a risk on really anything that was credit related. And then the RL, right? The real life happened. Divorce, get newly married, all the things that happen to all of us humans happens, and what's the impact that leaves on the credit report, right? It doesn't take very long for someone to be unemployed during COVID, 3, 4,
Mhm.
5 weeks, and for what to happen to the credit report, a missed payment on a credit card, or whatever might be happening. An inquiry, right? A lot of people are trying to gather together financial resources for financing a car, let's say, and they're getting a lot of hard inquiries. So they're asking the industry, the credit industry itself, for help, and right, they're stuck, right? Typically, the perfect situation is the person's finances start to recover, right? Like stimulus from the economy, stimulus from Congress, a job promotion, right? Their finances are catching up, right? The checkbook's balanced, that they're starting to save money maybe, but guess what's not catching up? Their credit score,
Their
their
credit
buying
score.
power, right? So you guys have seen that a lot, I'm sure, as agents, where someone is telling you, "Hey, I can afford, right? I can afford to live in a house and not pay somebody else's mortgage, but my credit score isn't allowing me to."
We see that so much.
Oh, I'm sure.
We see that so much. Where are you going, Jen?
I'm sorry. I hear
I'm grabbing a sip of coffee.
Drink your
I'm
coffee.
trying to shut it off. I'm like, who's calling me?
I was actually gonna run over to Quick Trip this morning if it wasn't icy outside and actually grab a couple of muffins, but no, you guys are right. You guys see it all the time. I had to throw that in there. I'm sorry, I had to throw that in there.
We
But
do. We get asked to see our muffins and stuff, but let's back up. I want to back up into the conversation that you just had before this and before my attention drifted. I apologize. You used a lot of terms, a lot of
Right.
credit terms that I don't
mhm.
think people understand. And they're actually on your credit report. There's, what's a hard pull, what's an inquiry, and like what's like a judgment, and if there's anything else that you would see that maybe I'm missing the term for, could you explain what each of those are?
Sure, sure. So what the credit profile and your credit score is trying to do, and it doesn't do this necessarily very well, is it's trying to measure the risk to a lender for lending you the money, let's say for a home loan, a mortgage. So a lot of times when you're reading a credit report, you're seeing words like judgment, you're seeing words like bankruptcy, you're seeing words like late payment or any other word. And what is really hard to understand is how does that translate into numbers? How does that actually translate into a score? I mean, for most people, it's not only just the words. Like, I'll take your word, for example, judgment. If a judgment has been entered against you, that can be resolved. You can pay a judgment. You can get your taxes back. And this is one of the interesting things we're having this conversation now. A lot of people are going to get a tax return back. They're going to take that money and they're going to put it towards the judgment, and rightfully so, right? The judge has motioned that that money's owed. They pay that money. But guess what's not resolved? Right? The word is resolved. In fact, the judgment may no longer even be on your public records or your credit report, but the original creditor verbiage is still on your credit report. How do you address that? Because now you're a first-time home buyer. You pull down a downloaded annual credit report and you're saying, hey, I just got done paying this bill, right? I just got done paying it. What does that mean in translating in terms of my buying power?
So are you saying that even though you may have a judgment, it may be settled, you may have paid it, it's still on your credit report as a judgment?
It's not on your credit report as a judgment. The history, I think one of the hard things to understand is that your credit report is not a snapshot of what's going on today. It's a live film of everything that's been going on in your financial life for 8 years, right? So I mean, I'm 53 years old. I can't tell you what I had for breakfast yesterday morning, let alone what my address was, 10 years ago, right? So it's not just the language that's difficult to understand, it's the time of when things reported versus when things are reporting. And so what ends up happening is like an inquiry. People get very confused. It's my credit report. Why can't I view it? Well, you can view it, but if you want a lender to view it, it's risk because you're asking for more resources. Let me ask you it this way, Lisa. If I had 5 inquiries in the last year and you only had 2, statistically, who's a higher risk to lend more money to?
I would assume you.
I am, because I'm asking for more resources. Now, to me, even as a fiscal conservative, that's confusing because I'm thinking, well, it's my right to ask for resources. I should be able to ask for as many resources as I want. But
Yeah, shop around.
Right, but guess who has the resources? The lender. The lender has the resources.
So let's just go back to an inquiry is to define it. The inquiry is somebody who's going to pull your credit, correct?
Yep, it's usually a bank. Like if the 3 of us pulled up annual credit report for a client, it's not an inquiry, right?
Okay, and then talk about a hard pull and what that means.
That's what a hard pull is. It's a hard inquiry where the bank is the one seeking to lend you the money or the resources. Yep. Versus a soft pull, which is Credit Karma or Smart Credit, which is a tool we use, our annual credit report, where you have every right to access the credit report, but what you're not going to get is any kind of scoring or any kind of transaction that's going to result in it.
Okay,
complicated. Great. Yep. But that's a huge thing that confuses most of the time what's going on. A lot of times the reason people go to a lender, and I was a lender, is they want to see their credit report and they want someone to tell them what it all means. And I'm not going to suggest it's the last thing you should do. I'm just saying it's not the first thing to do. The first thing to do is sit down with a credit coach like myself or one of the credit coaches at Credit Life and go through the credit report with them so they can explain to you these terms, explain to you what that means to your buying power.
I'm going to interject because this, I know, is a hot topic between you and I because we were really, really wanting to talk about this. The lack of education in the American system. It's nuts because all the things that you're talking about, all that verbiage and stuff like that should be taught along with economics 101 in high school, and I'm frustrated with the fact that when somebody can't buy a house because they go to the bank and they get denied a loan and they don't know why. Like there's just such a giant missing educational gap. that what your company is really providing is that, you know, that lack of education in one giant privatized form, one individualized, customized form, which, you know, for a lot of us, because we didn't know that for years, and it was the lack of education was built up, there's so much shame involved in that denial is like, why didn't I know this? And I want everybody out there to know it is not your fault you didn't know this, okay? And that the shame, you should have no shame. It's a lack of education. And I love that you guys, you can go and you can do something private with them, customizable, and like really walk them through.
Yeah, it's very powerful. And we talked earlier before the show about, you know, you talked about time and how things really haven't changed a whole lot since the 50s and 60s. And I'm not going to get political about it, but there is a barrier to entry when it comes to financial resources that exists for no other reason than education. It's a fact. So we host a website, Credit Life does, where it's 72,000 people from all backgrounds, from all age groups, all in this community online. And what I've learned in the last year is what my privilege has been, having been a loan officer, having been gone to school for economics, and just how much there still exists a 30 to 40 year gap in accessing lending resources that really hasn't changed much at all, other than the fact that there's professionals like us helping people access those resources, right?
Can we talk about the racial disparity and the transformation from redlining into credit score?
Sure, absolutely. That's real easy. So my background is economics, but I'll make it real short. So in the 40s and 50s and into the late 60s, if you walked into a bank, a big brick and mortar bank, into the back office in the room where it happened, right? To use Hamilton as an example, right? There was red lines on the wall where were the zip codes, the area codes, and it wasn't necessarily always racial, but it mostly was. It could have been a hayseed like me growing up in rural Minnesota, right? But you weren't going to have access to the funds because of socioeconomic disparity, period. All right. So what's happening mathematically is the banks are still trying to mitigate financial risk of lending money. They've replaced that with FICO credit scoring. All right. How they're calculating that risk is no longer a red line on a map. It's now FICO credit scoring. So of course everybody's going to grab Credit Karma and try to figure out where those red lines are. That's their right. That's their responsibility to do so. But you're absolutely right. It still gets back to education and the disparity and the access to that information and education.
Yeah, it's so frustrating. As a mom, it's my job now to like try to figure out where those gaps will be in my son's education and will it ever change. I have a fun story about that I always like to talk about. I had a library book that was on my credit report.
A library book.
A freaking library book.
That, because it went to collections because you had fines, they went to collections. Is that what it was?
Yeah.
Well, let me jump in there on that, because I'm glad you're bringing up a real world example. And this is something I've always thought, you know, and I take what I do very passionately and with compassion. You mentioned a library book. The library didn't lend you money. They lent you a book. You know, like, why is it on your credit report? So I'm going to leave the listeners and your listeners with this, and both of you with this too, as we continue to have a dialogue about credit and financial wellness. And it's really simple, and that is the credit bureaus don't have a fiduciary responsibility to any of us. They think of credit, the Experian, Equifax, and TransUnion as not much different than Facebook or Google or really any other data depository of information. They're just, in fact, creditors sell their information to the credit bureaus, right? So somewhere along the line, some county clerk decided to sell that data on behalf of Jennifer over there and let the rest of the financial community know that, hey, you have a library book. So, yeah.
I have another example. So I rented a car in August, and I didn't do a walk around on the car before I rented it. But when I returned it, there was yellow paint on it, like one of those, things that says "Don't drive in here" from a post. No dent, no anything. And I charged it on my American Express card. So, and I never take the insurance because American Express will pay any damages or anything. So I kind of blew it off. This happened in August, and I blew it off. Well, I finally, they kept sending me letters saying I owed them $1,600 Alamo, and if I didn't pay it, it was going to collections. So I did contact American Express. They paid $500 of that $1,600, and just yesterday I contacted my insurance company and to get that claim going. But I have had several letters that says, if you don't pay this, it's going to collections. And like you just said, I didn't borrow money.
Right. And so I had mentioned earlier that there's this thing between rights and responsibilities. And our government, for the most part, has tried as best they can to step in with some statutes that allow us to advocate for, our clients and some services that we're offering. But there's a responsibility on behalf of the consumer as well to be less consumer oriented and more, make your money go further, educate yourself on these things. You have both a right and responsibility to do that. So a lot of times as a coach, I get caught between brokering, a buyer or seller, right? A person, an individual that we're working with, or we call them a VIP client, because they are a VIP client, brokering their relationship with financial resources. Who's right, who's wrong? It's not even sometimes about that. It's about the fact that both sides aren't communicating on anything other than what? The credit report. I talk to people all the time who say, well, why didn't the collection agency just call me? Well, it was a lot easier for them to do what? Report it to your credit report and let it sit there for 7.5 years. Well, let's do something about it.
Well, they just sell it. That's it. This world is run on selling data.
100%.
And that's how people are making money. And that's one of the reasons why we started this show, is that once again, it's not about the item. It's not about the money. It's about the data.
Mm-hmm.
We are bought and sold all the time. Everything we do is recorded and sold to somebody else. So, and we can get super conspiracy theory about this and stuff like that. But it's the fact that you don't know that, and you don't know that's how people are making money.
Right. And I'm going to use a political analogy, and people could draw their own conclusions. But we've used the word collude a lot over the last 4 years. So whatever that means as a conspiracy theorist or as an activist, what's really happening when it comes to financial resources is everybody is colluding on your credit report, whether you like it or not. I mean, you could even go so far as to say there's lenders out there right now who I know you both know, great lenders, who are sitting on the sidelines wanting to lend people money at a fair and reasonable interest rate. But because of their own rules, the three of us didn't create FICO's credit scoring. The financial world did. They created their own barrier to their own game. There's lenders out there, there's investors out there who want to lend money, but they're not going to based upon credit scoring and the data that's being collected through the credit bureaus in large volumes. I mean, 380 million Americans have a credit profile.
Mm-hmm. Well, this is one of the reasons why we do this show. You don't know what you don't know, right?
No, you don't. Well, one last thing I'll say is, so the biggest, I think one of the people ask us a lot, what's the biggest value that Credit Life offers our clients in a partnership? It's the first step. It's the consultation. It's doing a one-on-one. I love working with couples only because as a coach, I love the synergy I can develop between a couple that are committed to each other financially and to get into a goal to buy a house. It's the consultation, because the things that we're talking about here, I talk about in the context of what's actually on the data that's in that credit report. And it's powerful. It changes people's lives.
So in talking about that, so you offer a free consultation to anybody who's interested in talking with you. Is that correct?
Yeah, myself or any one of the other coaches on our team, any of the certified coaches on the team. I won't say it's a free consultation, because there is a $22 fee to set up online credit monitoring to get a professional soft pull of your credit, but there's no obligation to enroll. It's a half hour to an hour education of what credit means to you and what it could mean to you to turn it all around and become financially stable.
Okay, so for $22, that's fantastic.
I think so.
Yeah.
You're basically talking to a loan officer, because most of our coaches were once loan officers. You're talking to a certified credit coach with a very solid financial background, and you're getting a half hour to an hour long education versus a denial for a home loan.
This has been great.
I know, right? We need more of this. Thank you so much for your honesty, your openness, and
oh, my pleasure.
Your education, because we do need more of this. Thank you so much, you guys. We are going to once again, it's yourcreditlife.com.
Yeah, how can people get in touch with you, Rick?
Real super simple. I have a website. It's www.bookcoachrick.com, and that'll schedule that no-cost consultation.
And we will have
in the comments.
Please
do. We'll put it in the comments so anybody can get in touch with you. Thank you so much for being on our show. We'll have you back on again.
Thanks, Lisa. Thanks, Jennifer. Good to see you again.
Good to see you too.